just changing this overall. Now it's okay, right?
Yes. Hello, everyone. Welcome to Urban Pro Live Masterclass. We are here with yet another interesting and informative masterclass for you. This is Sinchana from Urban Pro team, your host for today. Before we proceed further, we would like to inform all the attendees and YouTube viewers that Urban Pro is India's largest and most trusted learning network with over 7.5 lakh tutors and trainers. Through Urban Pro, you can easily find highly skilled and trusted personal tutors and trainers for your learning requirements. Okay, coming back to today's session, we are presenting an interactive live masterclass on introduction to accountancy. But before we kickstart the presentation by our speaker, I would like to address our attendees and YouTube viewers that during the presentation, if you have any questions, please type them into the Q&A on your Zoom control panel. Moving on, for those YouTube viewers, you can drop your questions on chat box. And don't worry about your questions, we will bring them after the presentation as we will have time for questions at the end. All right, without further ado, let's welcome our speaker, Miss Indira Rawal. She is a professional accounts trainer with over 25 years of industrial experience and 5 years of teaching experience. Having great subject knowledge and experience, Miss Indira Rawal is popular among her students for her unique teaching skills. A warm welcome to you, Indira ma'am. We're thrilled to have you here.
Thank you, Sanjana. Yeah. So, should I start? Good afternoon to everyone, and welcome to my session of Introduction of Accountants. I think you all are in seventh. You are all passed your 10th, and now you're opted for commerce stream, right? So in commerce stream, the one of the major subject is accountancy. In this my lecture, I'll be covering basic things. What is accounts? Why it is considered? It is or what is sorry? Why accounting is considered as language of business? What is the process of accounting? What are the uses of financial statements which are prepared by the accountant? What is the double entry system out which you might have heard n number of times? And what is accounting equation? These are the few things on which we will be discussing in this particular session, live session. In case you have any doubt or you need any type of clarifications, please let me know. Put a question in the chat box and ma'am will take care of it. Okay. And we will reply to you at the end of the session. Okay. Thank you. Let me start. First and the most important thing in accounts is not a dead subject. It's a live subject. You have to be interactive. You have to keep on doing your brainstorming because accounts is a subject which is related to the commercial activities, and the commercial activities are done by each and every individual in their day-to-day life. You're purchasing goods, you're selling goods. What does it mean? Purchasing burger is also good. Making payment for the burger is an expense. Okay, so these are some normal transactions which we keep on doing in our day-to-day routine life also. Introduction. Till now, in the previous classes, you have studied the subjects like mathematics, science, social studies, Hindi, English. But I am damn sure you might have not heard anything about commerce till the time you opted for commerce. Commerce is a field, it's a live field, it's a fresh subject for all of you. So in commerce, there are majorly three subjects. First one is accountancy, second one is economics, and third one is business studies. Do you agree with me or you don't agree with me? Can you just send a message on the chat? So among all this, the main subject about which we are going to discuss today is accountancy, and accountancy is heart of commerce stream. Without accountancy, you cannot imagine about commercial world. So what does the first thing comes in your mind when you think of when you heard the word accountancy? Is it something to do with mathematical calculation? No. Something related to business? Okay. Something related to keeping record of someone's earning and spending? So these are a few questions which comes in your mind, right? So You are right. Accountancy has to do with all these three aspects. It has to do something with the calculation. We are doing calculations. For doing calculations, we use mathematical calculation. We do plus, minus, multiplication, subtraction. These are the basic calculations which are required to be done in accountancy also. Yeah. As is it to do something with business? Yes, it has to do something with business because commercial activity is a business activity. Okay. Now, so as a company is doing business, so we have to by using accountancy, we will be keeping the record of a company who is doing business, and when a person does a business, either he will earn or he will lose, right? There will be a profit or there will be a loss. I think you all are familiar with the word profit and loss, right? Now let me introduce you to you all our father of accounting, Mr. Luca. Okay, as the name, sir, the name is, can you see his face? I think it's visible. Mr. Luca is father of accounting, right? He said a very famous quotation for account and which is applicable for each and every accountant till date. What he said, a person should not go to the sleep at night until the debit equals to credit. Why he said so? That we will understand as we move further. So what is an accounting? Accounting is an art of classifying, summarizing, analyzing, interpreting financial statements and communicating the results to the interested person. This is what accountancy is. So you can see accounts is also an art of recording. Then we do the classification. Then we summarize it, whatever we have classified. Then we analyze it. Then we interpret it. And then finally, whatever interpretations we have done based on the information available, we communicate that to the concerned persons. So here you can see in accounts, these are the two common words which are used. This person is writing, this person will write either on the debit side or on the credit side. No, he will always write on the both the sides unless and until your debit is not equal to credit or your credit is not equal to debit, your balance sheet will not tell. Accounting will not tell.
Indira ma'am, sorry to interrupt you. Your voice is a bit low.
Sorry?
And when your voice is a bit low, and when voice is coming actually in between.
Now it's okay. Can you hear me?
Yes, yes.
Now
It's
my
very
voice is okay? Yeah. Okay. So accounting is considered as a language of business. As you know, English is a language, French is a language, Kannada is a language, Punjabi is a language. So these are different languages. For languages, what is the basic thing required? There are basically four things required for any language. Okay. Can anybody tell me what are those four things which is required by for the business? Anyone? Anyone? Okay, no issue. Yeah. So in accounting, to become a language, there are basically four things. The first one is vocabulary. So as English has a vocabulary that is A, B, C, D, E, F, G, these are the alphabets. These alphabets are added and words are made that it becomes a vocabulary for the English language. In the same way, in accountancy also you have vocabulary, common vocabulary. This common vocabulary includes totally five alphabets. The first one is capital, the second one is liability, the third one is expense, fourth one is assets, and fifth one is revenue. Once you are familiar with vocabulary, what does it mean? You can apply the rule, that is a grammar of any language. So you will apply the rule. In the same way you have in accounts rules that is known as accounting principles and standards. By applying the rules, you can start writing. The way after once you know the vocabulary, once you know how to use that vocabulary, what you do, you start writing sentences. In the same way in accountancy, once you know the vocabulary, once you know the rules, then you can start writing it. So what you will be writing in accounts, you will be writing journal, you will be writing ledgers, you will be writing trial balance. These are the three basic documents which you will be writing. Okay. Once you have written something, now you should compile it as a book, right? So compiling that as a book, what you will do in English, what you do for compiling, you make an essay or you write a subject book. So in the same way, in accounts also, books are written. Those books are known as financial statement, like trading, profit and loss account, and balance sheet. So, as accounting has a vocabulary, it has a grammar, it has a written, it requires to be written in a particular format by using the grammar rule, and it has to be compiled in the form of books. Therefore, accounting is considered as a language of business. So now, before we go further, let's understand the vocabulary of accounting language. The first word is capital. So what is capital? Capital is nothing but the money invested by the owner. Who is the owner? Owner is the person who is starting a business. Okay. Second thing. Second was liability. Liability means what? The amount payable by the business in the future. It can be short-term liability. It can be long-term liability. Long liability means you owe something to be paid to the outsiders. That is known as liability. Okay. Now, what is expenses? Expenses is the amount which is spent to earn revenue in the business. Like we hire workers, so we have to make payment to them in the form of wage, that is known as wages. We have staff, so to staff we have to make payment of salary. Okay. Now for writing you require stationery, you require files, pens, pencils, stapler, all these things, folders, all these things. This is known as stationery. So what is this? For earning revenue, you have to spend something. Okay. So whatever you are spending for earning the revenue in the business, that is known as expenses. Agreed? Now fourth term, asset. For starting a business, you require some economical resources. Okay. What are the economic resources? Like you have an office, you should have an office. You should have a building. You should have a car. You should have machines. You can have money. Should have money also in hand. Okay. And you can have a different items. If it's a grocery shop, if you're doing a business of a mall, say we have a trend of opening a mall. So if you're having a mall, setting up a mall, what do you require? You require a building to be purchased. You should have a vehicles to transport the staff and material. You should have machines for doing the packing and everything. You should have an office and you should have a cash counter for collecting the cash. So what is asset? Asset is an economic resources which can be expressed in monetary term. Okay. Second thing which I will tell you about the asset is, asset are those items which will stay with the business for a longer time. We will be using it year on year. Okay. Fifth one is revenue. What is revenue or what is income? It's the output. We have given our efforts, we have done something, so we are getting some output in the form of sale. Input is purchase, output is sale. Okay. So the difference between input cost or the input expenses minus whatever customers are paying to us equals to income. Do you agree with me? Say, what income means? Income means see, I've done purchases. Okay. I have paid salary. I paid salary also, and I made sale. Okay. I made sale of say 10,000 rupees. Okay. And purchase was of 5,000 and the salary paid was of 3,000 rupees. So the difference, so this total is your 8,000. So this is what is this? This is my input. Do you agree with me? And what is this 110,000? This is nothing by my output. So my income is equals to input minus output equals to income. In our case, what will happen? And input is 8,000 and output is 10,000. So the income is 2,000. Okay, this is the way we calculate it. So inputs are written on the debit side and outputs are written on the credit side. Okay, am I clear with this? Now let me go to the next one slide, which is very important for understanding. I think you people are paying attention to my lecture. So now let's understand what is the process of accounting. Okay, the process of accounting involves identification of the business transactions. Okay, then measuring in monetary terms, then recording of business transaction. And once it is recorded, we have to classify the business transaction. Once we do the classification, it has to be summarized. And once it is summarized, you have to analyze and interpret the transactions. In this, all these things, you will see one thing common, that is known as business transactions. So what is business transaction? Business transactions are those transactions by doing which a company gets earnings, or which are required to be done for running a business. Okay, so first and the most common thing which is there is all the transactions in accounting. We record only business transaction. We don't require any other transaction. What are the other transactions? Suppose I have given party to my friend, okay, who is working with me. So is it a business transaction? No, it's not a business transaction, because by giving a party to my friend, company is not going to earn anything, okay, or company is not going to spend anything. It is a personal transaction between me and my friend. It is nothing to do with the business. So first and the most important thing is we will identify the transaction which are related to business. Now secondary transaction can be in the two forms. It can be either in the money or in kind. It can be in cash or in kind. Okay, but for in accounting, we record only those transactions which has monetary value. No kind transactions will be recorded. I I took my boss in my car. Okay, if my boss pays me 500 rupees, then it will become a monetary transaction. But if he doesn't pay me anything, then it is not a monetary transaction. Okay, जहाँ पैसा है वहाँ accounting है, जहाँ पैसा नहीं है वहाँ accounting नहीं है. Now you have identified the business transaction, then you come to know that you have done selected the transaction or monetary transaction. Now once you have a monetary transaction, now what you will do, you will record those transactions as per the rules and regulations of accounting. About this, there is a big list of accounting rules and regulations. In my this session, I will be selecting basic things which is required to consider to write books of accounts. After recording the accounting business transactions, what we will do, we will classify these business transactions as per our vocabulary. That is asset. We have to identify whether this business transaction is related to capital, whether it is related to asset, whether it is a liability, whether it is expense, or whether it is an income. Because once we know the nature, once we classify it, we know the vocabulary. As per the vocabulary, we know the nature of a business transaction. Now, based on this, by applying the rules, we will summarize this business transaction in the form of journal entries, ledger, trial balance, balance sheet. Okay. And once our profit and loss account and balance sheet is being prepared, we will interpret them by using different financial ratios and reports. Okay. And once the business transactions are interpreted by the financial experts or the accountant experts, that is chartered accountant, cost accountant, or accountants, then it will be communicated to the internal and external user of the company, of the business. How to remember this? This is a really very important question. And once you have entered in this field, you have to remember this method forever. The process of accounting has to be remembered forever. So I just made one small mnemonics. It says, I miss Rajma Chawal and Shamlal's Aloo Chaat. I think this is the simplest abbreviation by which you can understand this mnemonics. By using it, you will remember this process of accounting till you are alive and you're working in this particular field. So what does I means? I means identification. M means measuring of in monetary terms. R means recording of business transaction. C stand for classification of business transaction, and Shamla stand for summarizing the business transaction. Alu stand for analyzing, and chart stand for communication. So now, अगर कोई बोले कि आलू चाट खाया क्या, तो क्या याद करेंगे? आप याद करेंगे analysis of and interpretation of business transaction and communication of it. Okay. By remembering this simple sentence, you will remember the whole process of accounting. If you want to learn accounting in a very systematic manner or in a very easy manner, so that you remember the things forever, you should choose such small mnemonics. Okay. When I'm teaching, I use such mnemonics a number of times, and therefore my students understand and remember the things very fast. Okay. Now, who are the users of financial statement? Basically, there are two type of users. One is internal user, another one is external user. So, what is internal users and what is external users? Internal users are those people who are associated with the company, like owner, like employees, like customers, like creditors. Okay, who are the owners? Owner are the person who has invested money in the company. Who are the what is management? Management is a team of people who are running the show. Who are the employees? Employees are those persons who are working in the company. Who are the customers? Customers are those people who are purchasing material or goods which has been made manufactured by the company, by the business owners. Who are the creditors? Creditors are the person who are supplying goods, who are supplying raw material to the company on credit. Okay. So all these people are interested in knowing the performance of company. Therefore, they use the balance sheet, the informations available in the form of balance sheet, profit and loss account, and different ratio analysis and to understand the financial position of the company. Now, other than the internal users, we have external users also. Who are, who are the external users? The external users are those persons who need the data to understand the performance of a company indirectly. So, they cannot assess, as they are not a part of the company, therefore they cannot assess the data. They cannot assess the data. Just give me a minute. Sorry. So, as they are not part of the company, therefore they don't know what is happening in the company. But if they want to invest, so who are the persons? Bankers are the persons from whom company takes loan. Okay, so they are our external users. Same way, government is interested in collecting taxes or making schemes for promoting different sectors. So they want to know the performance of the companies based to that. Suppose in this current year, company in this current year, government has decided to give a push up to MNCs, that is small scale companies. So what they will do, they will try to analyze the reports available on the portal of financial data available in the portal or in the newspaper or through the different agencies, and will analyze the reports. Same way the lender. Lender can be a banker or a financial. Bankers are the one source from which company gets finance. But other than banker, there are many private agencies who are also giving loan to the companies. Tax authorities are interested in collecting taxes. In India, we have two types of taxes. One is direct taxes, another one is indirect taxes. The direct tax is known as income tax, and the indirect tax is known as GST in India. Okay. Now let's go to the next one. What is the base of accounting? What is the base of accounting? Accounting is done in India based on two methods. One is known as cash basis, another one is known as accrual basis. So what is cash basis and what is accrual basis? Let's understand this with the help of an example. We all go to doctor? Yes or no? Please reply. Do we go to doctor? Say yes or no. There is no response. See, when we go to doctor, we have to make a payment to him in cash. So the books are account which he maintains. So the services what he is given to us, for that he is getting cash immediately. Okay. And if he maintains the book based on the amount collected, that is known as cash basis. Now we go to now we are consuming electricity bill every month. But what we are doing, we are making payment at the end of the month. So we are consuming the services first and payment is done at the end of the month. So the basic difference between these two methods is in cash basis, you will get the cash immediately. Cash flow or the revenue or expenses will be recognized at the same time when it is been incurred. Whereas on the accrual basis, it will require cash flow and the revenue and expenses recognition will be done later. Let's see our example. If the salary of 15,000 of January 2020 is paid in the month of February 20, it will be recorded in the books of account only in February because they are following cash basis. But if they are following accrual basis, then they will record the salary in the month of January only, well, even if it is paid in the month of February. So January salary will be recorded in the month of January only, and the February salary will be recorded in the month of February. So the difference is here the salary is recorded in the same month. Okay, same month, but the payment will be done in different month. Okay, are you understanding this? But here salary will be recorded in the month it is in which it is paid. So you will record if you are making payment of January month in the month of February, so it will be recorded in the month of February and not in the month of January. So this is a difference between these two methods. Okay. Now another principle of accounting is dual concept. What does it say? It says that every transaction has two effects. That is, one is right hand side effect and another one is left hand side effect. So that is on the right left hand side is debit and on the right hand side it is credit. Okay. So every business transaction is recorded having a dual aspects. One aspect is on debit while other aspect is credit. The system of recording transaction based on this principle is also known as double entry accounting system. This concept provides a very basis of recording the transaction in books of account. It states that every transaction entered in the books should have two aspects, one debit aspect and another credit aspects. This principle is commonly expressed as fundamental accounting equation which is given below. Okay, this is the fundamental accounting equation. What is the fundamental accounting equation? It says assets equals to liability plus capital. This equation states that asset or business are always equal to the claim of the owner. Okay, so let's understand this with the help of few examples. So we have, before we go to examples, let's understand the process of recording this accounting equation. in this accounting equation. How we will be doing it? Okay. So, recording of the transaction. This is the process of preparing accounting equation. What we will do? First, we will analyze. What we will analyze? We will analyze the term of variables. The transaction in the term of variable. That is capital, whether it is a capital, whether it is a liability, whether it is expense, revenue, and asset. To remember this sequence, you can remember it like this. Just remember clear, the word clear, which we, if you elaborate this word clear, C stand for capital, L stand for liabilities, E stand for expenses, A stand for assets, and R stand for revenue. So, जैसे ही आपके पास में कोई बिजनेस ट्रांजेक्शन आता है तो आपको उसमें देखना है कि इसमें कौन से टर्म्स हैं, इसके अंदर कौन से दो वेरिएबल्स हैं, या इसके अंदर कौन सी दो वोकेबलरीज है, कैपिटल और लायबिलिटी है, लायबिलिटी और एक्सपेंस है, एसेट एंड रेवेन्यू है, या एक्सपेंस और एक्सपेंस है, या रेवेन्यू और रेवेन्यू है. The variants can be of the same nature also or of the different nature also. Now, based on that, what you will do, decide the effect of the transaction in the terms of increase or decrease in the variable. What we will do, the second step, what we will do, we will understand whether that particular variable is increasing or it is decreasing. Suppose if capital is increasing, then there will be a different effect. If the capital is decreasing, there will be a different effect. So now, based on this effect, it will be recorded on the relevant side. That is either on the debit side or on the credit side. But because we are recording this accounting equation, therefore we will say whether we will record it on the left hand side or right hand side. At last, we have to ensure that our left hand side matches with our right hand side. If there is a difference, that means there is some mistake done by us in recording the transaction. So again, we will start from the first. That is, we will again analyze all the transactions. Then we will decide where to enter it, which one is increasing, which one is decreasing. Then we will record it again. Like that, this process keeps on moving. Now, I just made one small slide to make you understand what will happen. Always consider a business unit separate from your own, from the owner. Okay, so this is a business. Okay, you have to always think from the point of view of business unit. Now, if capital is introduced, that means it is added, so business will be receiving it. Okay, but if capital is taken out from the business, so it is outflow, it is going out. Okay, same way profit is coming. If business has earned profit, so what will happen? Business will increase the value of business. But if they are making losses, then it will reduce the value of business. Do you agree with me? When I purchase an asset, it will increase number of assets in the business unit. But when I sell the assets, it will reduce the number of assets available with the business unit. So, same way, when we take loan, we are increasing the liability. When we repay the loan, we are decreasing the liability, right? So we have to always think from the business point of view about all the four elements which are there in a transaction, out of which at least minimum 2 will be there, or at least minimum 1 will be always there. So if it is increasing, it will be having different effect. If it is reducing, it will be. Now let's take a small transactions and do the entries for it. Okay, let's start now. Do you have any question till this? Anyone is having any question? You can think over it again. No questions? Should I move further? Should I move further? If there is no questions? So the first, see, this is the way we make a this is the accounting equation that asset equals to liability plus assets, right? Do you agree? Do you agree? So let's see, when we started the business, there is nothing on the asset side, there is nothing on the liability side. Okay, no transaction. So starting effect will be 0 here and 0 equals to 0 this side, right? No transaction. This is a starting point. There is no assets, there is no liability, there is no capital. So asset equals to liability plus capital. So now let's go to the next slide. What has happened in this? Started business with a cash of rupees 1 lakh. So now what will happen here? What will happen here? Cash will increase by 1 lakh rupees and capital will also increase by 1 lakh rupees. What is happening once we have introduced the cash in the business? So what is happening? On one side, cash is increasing, and on the other side, capital is increasing. This cash, stock, debtors, etc., all are the components of assets. Okay. Now, what will the ultimate effect? Ultimate effect will be 1 lakh will be on the asset side equals to 1 lakh on liability side plus capital. Do you agree? Till this, I think everyone is clear. Let me go to the next one. Now, the next transaction. Purchase goods rupees 30,000. Okay. So what is the effect? We have purchased goods rupees 30,000. Sorry, there is some problem. I'm just shifting back. Just give me a minute. So we have purchased goods rupees 30,000. At that time, there was a stock. So what will happen? My stock will increase by 50,000 rupees and my creditors will increase by 30,000 rupees. So my total will become 1,30,000 and 1,30,000 on both the sides. There is slight typing error. I will just rectify it. It is not 30. It is supposed to be 30. So you can see when I made a payment, what has happened? My cash has reduced and my stock has increased. Okay. Now here what has happened? My credit balance has increased. Okay. So the ultimate effect is 1,30,000 equals to 1,30,000. Now let us go to the next transaction. The next transaction says good costing rupees 10,000 was sold for rupees 50,000 in cash. Okay. What is happening in this transaction? What we have done? What we are receiving? We are receiving 15,000 cash. Okay. So what we are receiving? We are receiving 15,000 cash. So now our cash balance is 75,000. Okay. Now, then what is happening? So the net effect will be 1,30,000 equals to 1,30,000. Now let's go to the next one. Purchase goods rupees 30,000 on credit. What is happening? We are purchasing goods on credit. So what will happen? My stock will increase by 20,000 and my creditors will also increase by. So the net effect is 1,35,000 equals to 1,35,000. Okay. Now let's go to the next one. Goods costing rupees 10,000 was sold for rupees 15,000 in cash. So 15,000 was added here. Okay. And stock was reduced. Let's go to the last one. Purchase of furniture. What we are doing? We are purchasing the furniture. When we are purchasing furniture, my cash will be reduced by 5,000 and my furniture will be increased by 5,000. So the net effect is 1,30,000 minus equals to 1,30,000. Because on there is no change in the liability and assets. Okay. Now let me take another example. Cost of goods 10,000 was sold for 15,000. Now what has happened? We have sold the goods for 10,000 and 15,000. So what will happen? My cash balance will increase by 15,000. My stock will reduce by 10,000 and my capital will increase by difference amount of profit. So that will be added in my asset side. So let's see how it affects my. So stock reduced by 10,000, cash increased, so it has become 40,000. So cash increased by 15,000, so it has become 90,000. Okay. Now third effect, my capital increased by 5,000 because I made a profit of 5,000. So the total effect will be, the net effect is 1,35,000 asset side equals to 1,35,000 on the liability side. How to find this 135,000? That is 90,000 plus 40,000 plus 5,000. If you add all these three, you will get 1,35,000. Similarly, if you add creditors plus capital, you will get 1,35,000. So here what has happened? Your cash has increased by 15,000. Your stock has decreased by 10,000. So 15 minus 10 equals to 5. And the 5,000 is a profit which has been added to the capital side. Okay. Till this I'm clear. So now, what happens? Let's see the next transaction. So the next transaction says withdrawal of cash for personal use. What has happened? The owner has withdrawn the cash for some personal use. So it is known as drawing. So with this, what will happen? What will be the effect? What are the variants which will be affected? One variant is your cash, another variant is your capital. So now let's see what will happen. By 1,000 rupees, your cash will come down. So it will become 93,000. Earlier it was 94. Now it has become 93,000. The capital, which is 1,000, then 1,09,000 will come down by 1,000. So the new balance will be 1,08,000. So now if you see the total again, the total from one side will be 93,000 plus 40,000 plus 5,000, which equals to 1,38,000 equals to, let's see whether 30,000 plus 1038 is equal to 1,30,000. Yes, 101%. It is also 1,38,000. So now again in this particular slide we understood that asset equals to liability plus capital. Okay. Now let's take one more example. Here what has happened? Salary is outstanding rupees 4,000. What does it mean? What does it mean? It means we have not paid salary, okay, but we have to pay it in future. So it's a kind of expenses, okay. So what will happen? It will reduce my capital, okay. Reduce my capital by 4,000 because it is outstanding, and it will increase my outstanding expenses by 4,000. So here it will be minus, here it will be plus, right? And there will be no effect on the asset side. So let's see how it affects us. So what will happen if you reduce the capital by 4,000 rupees? It will become 104, 1,04,000. And now as it is a salary is not paid and it is outstanding, so we'll add, it will increase my outstanding expenses by 4,000. So the revised expenses will become 4,000. Okay. Now here there is no effect. There is a zero effect. So let's add this total. Total is 93,000 plus 40,000 plus 5,000. So this equals to 1,38,000 equals to this side. Let's see what is the total of this. 30,000 plus 4,000 minus 4,000. Right? So this becomes 1,38,000 again. There is no change. So it is 1,38,000 on the both the sides. Okay, let's take one more example. Why rupees 500 depreciation of furniture? So what is depreciation? Depreciation is the amount which we charge for using a furniture, which is charged by the business entity for using the furniture for a particular time. So generally in accounting period, generally in accountancy, we consider 1 year as an accounting period. So this depreciation, with the depreciation, what will happen? With the depreciation, the value of your asset will come down and you will be booking it as an expensive. So with expenses, your capital will come down. Okay. So what will be the ultimate effect? The ultimate effect will be capital will come down by 500 and furniture will also come down by 500 rupees. So it is affecting both the side, that is asset and liabilities. So the total asset will become 93,000 plus 40,000 plus 4,500. That is 1,37,000. Okay. And this side 30,000 plus 4,000 plus 103.5. 103,500, 1,03,500. So it also is 1,37,500. Okay. So now after this transition also, your asset side is equals to liability side. With all these examples, we can draw the conclusion that in a business transaction, by using double entry accounting system or dual aspect of accounting system and cash based or accrual based of accounting. In this slides, I've used all accrual based accounting. I've used accrual based of accounting. Always find left hand side equals to right hand side. That is, assets are always equals to liability plus assets capital. With this, I end my session. If anyone has having any question, you can ask me. Thank you. Any questions? Hello.
Yes. So if in case you all have any questions, do drop them in the chat box. Um, any doubts regarding the whole session you had, you can put it up in the chat box and we will take them up. I hope the concepts explained are pretty much clear to you all. So we need to wrap our session for the day, as we've reached the end time. I would like to inform you that the session has been recorded, okay, and it will be available on UrbanPro's YouTube channel. In case you want to access the recording one more time. To connect with our speaker, book a free demo by clicking on the link shared in the description box. Yeah. And also get regular updates on interactive live masterclasses and informative lesson videos. Do subscribe to our YouTube channel. Not just that, we will be live on every Tuesday as well. Your feedback is valuable for us, so it will help us improve and bring masterclass topics of your choice. So do not forget to fill up the form post session. And before we take a leave, I would like to thank our speaker, Miss Indira Rawal, for investing her valuable time and also all the attendees for being such wonderful audience. So stay tuned, everyone. Thank you so much.
Thank you very much.
Yeah.